Good morning, everyone. Hope you enjoyed that little slice of Kenny there. Let's get to Tom Gentile in 5, 4, 3, 2.
Hey everybody, Tom Gentile. Welcome to our Power Profit Trades for Tuesday, January 4th, 2022. Happy New Year to everybody. If you didn't join me yesterday, we're going to do a little bit of a rewind, talk a little bit about 2021, talk a little bit about the Flying Five. I want to go through and actually show you how I place these orders. That's kind of important. Something I want to do for you as well. I gave, for those of you with me yesterday, I gave you a 24-hour head start. I'm back running these trades, and it's going to hurt me today because the market's up again today. But you know what? That's okay. This is not a day trade. This is not weekly, not even monthly we're dealing with. I wanted to start the new year out showing you how to options invest. So we're going to do that. I want to talk about the money calendar beforehand, and I want to show you what the money calendar looks like heading into January as well, because you would think after all of this move to the upside that we would get some sort of a retracement, we'd get some sort of selling that would happen. But the money calendar is telling us a little bit of a different story. And then finally, like I said, getting back into the Flying Five, I'm going to talk about V1. I'm trading V1. That's version 1. If you missed it yesterday, I will cover it again. And then we're going to get into the cheaper ways to trade this. In fact, my son and I were looking at this, and he was very interested in just the call options. And I'm going to tell you why he likes the call options on at least a couple of these stocks going forward into the new year. All right. Big shout out to my YouTube crowd who's hanging out with me here today, as well as the folks here in the main room. If you have questions or comments, feel free to leave them over there to the right, and I will get into those throughout the hour. All right. Hey, if you missed yesterday, we were talking about how great the markets treated anyone who was basically buying and holding. If you bought on January 1st of 2021 and you basically put the computer, you close the laptop, cut the phone off, basically didn't listen to the news, because if you listened to the news, you'd have been taken right out of the high side, because all last year it was all about how bad the market was going to be, that the economy was going down the tubes, that the virus was going to kill us all. And, the stock market is the absolute truth of what's going on pretty much everywhere. All right. Stock market factors in everything. And it factored in a 28% move to the upside for the S&P 500, or the SPY. Where are we going this year? It seems to me that the path of least resistance still seems to be up. All right. Anyway, for those of you that happen to buy and hold, really good year. This was one of the best years on record to be a buy and hold trader. But we're not buy and hold traders here. And so I want to show you some alternatives as we go forward. The other chart I wanted to show you was gold. All right. So if you were a buy and hold trader in GLD, not the worst year I've ever seen, but definitely not the best, as GLD ended up 4% lower than it did on the start of 2021. And then finally, we were talking about Bitcoin. We were talking about, cryptocurrencies. I mean, it depends on where you were, but let's start with Bitcoin. All right, the asset winner, 65% higher move from the beginning of 2021 to the end of 2021. And that was Bitcoin, because had you have been looking at Ethereum, it was several 100% move higher. And then there were some smaller cryptocurrencies, altcoins, microcurrencies, as we like to talk about those, that had some absolutely superior moves. In fact, we had some really good results with microcurrency trader. I wonder if I have any of these that I can share with you guys. Yeah, right here. So take a look at this: 65 winners and 9 losers across 2021. You can see over here on the right-hand side of the screen, right? The right-hand side of the screen is where all the excitement is. And as you can see, Greens were winners. There were some losers. We had 9 losers last year, but we had many, many more winners throughout 2021. And although some of you are looking at microcurrencies and you've seen, wow, the last month or so, it's just really kind of been pullback. It's been consolidation. Hey, you know what I see? I see a spring, and I see a spring tightening up. And that spring is tightening up for what I think is going to be the next explosive move, right? We're seeing that happening right now. We're seeing that happening with cryptocurrency and really a lot of the shorter term microcurrencies that are out there. So I thought I would just share a moment and talk to you about the asset winner and the winners within the winner. All right. Now, let's go ahead and jump. I'm only 6 minutes in, guys, and we're jumping into the money calendar because I want to talk about where the money calendar is going and where I see it going for the month of January. Okay? So let's take a look at the money calendar, which is part of our option tools, Tom's option tools. But I want to share with you what we see happening for the entire month. And here it is. This is the money calendar as you see it right on my tools. It is just a calendar, okay? But on the surface, you see the calendar. You see a lot of green on the screen. But there is much, much more that lies beneath the calendar. As you can see, take a look at the month of January. So here's today, January 4th. You know, I have 94 opportunities today in the money calendar, and 93 of them are bullish, and 1 is bearish. So I have literally a 99% board today coming in on the bullish side. Tomorrow is even better, 100%. 100% of the stocks that are seasonal. And what I'm talking about is we're talking about the markets. We're going back a minimum of 10 years, and we're looking for patterns that have a 90% or better historical probability of patterning up versus down or down versus up. And there you go. Take a look at that. Tomorrow is looking like a full bull. I want to show you the overall market here just for a moment, because look at what's going on this week. Bullish. Look at next week. Bullish. Look at the third week. The 17th, you go, well, there's nothing going on the 17th. Well, that's because it's a market holiday, okay? And then, of course, we've got the rest of the third week of January, bullish. Fourth week of January, bullish. I see a couple of bearish stocks in here, but I don't see a single spot on the calendar in January where we're seeing red. We're seeing red coming across the screen at all right? And those of you in the room that are fast fortune traders, you're going to be very excited at some of the additions that we're going to be adding to the Fast Fortune Club when it comes to the money counter. I'm going to leave it right there, all right? I don't want to spoil the surprise, but we got some really cool things that are happening, and we're going to be turning these things on and activating these things for you, all right? Obviously, alternative wealth, we've got some really cool things happening too. I'm going to let you know a little secret, okay? All 1,354 of you. Here's a little secret. How about the fact that, and a lot of you have been asking, how come you and Nick Black don't do anything together? All right, how come you and Nick have your own separate shows? Well, guess what? Starting next week, we're going to be doing some stuff together. Yeah, that's right. So Nick and I are going to get together and put the best of the fundamental and the best of the technical and the best of the rules-based and the best of NFTs and the best of all that stuff. We're going to be doing that together next week. Starting next week. Can't wait. A lot of you have been asking about that, so it's happening. So anyway, yeah, look for some big changes happening next week right here in the main room. All right, so I know my ADD is all over the place. Let's get it back in. All right, let's get it back in here. And I want to talk about, again, we've got a bullish calendar set up. We talked about this yesterday. What happens? A lot of times what happens in the first week of January, so goes the month of January. If yesterday was any indication, and today we saw the futures markets up again today on the open, that the first week of January is looking pretty good. Okay? All right. So, hey, you guys want to take a quick peek at some of the stocks we're talking about that may have a really nice bullish opportunity in the month of January. Let's pop on the 4th and let's take a look and see what's kind of smoking in terms of options. So I'm going to rank this by something called Power Meter, so you can see the big seasonal, big pattern stocks. NVIDIA at the top of the list. Take a look at that. Netflix, NFLX is number 2. There's Lam Research, number 3. Adobe, number 4. Intuit, number 5. I mean, look at the top 5. What does that say? Technology. Netflix is, it's entertainment, but guys, it's technology, okay? It is technology. Lam Research, technology. Adobe, technology. Intuit, technology. So you've got all these technology stocks sitting at the top of the heap. I mean, there's, ISRG, CRM, Salesforce, SWKS, and KLAC rounding out the bottom 5, but look at those top big boys, okay? And when I look at NVIDIA, I see, well, golly, that's a 30-day trade. That has had net profits of over 190 points on the stock in the last 10 years. 9 of the last 10 years during this time frame, starting today, going forward 30 days from now. So we've been 90% accurate, okay? Roughly $19 during each year. The end date on this trade, well, we're starting now. The end date is February 14th. 6 years ago was the last time this thing had a loser. In fact, look at this. The second was 6 years ago. The third was 6 years ago. The fourth was 6 years ago. And the fifth stock in the group was 8 years ago. So something was happening 6 years ago that caused NVIDIA, Netflix, Lam Research, Adobe to drop. So there you go, So there you go. And then take a look at Power Meter. Well, what Power Meter basically tells us is how trendy are these trades, all right? The higher that number, the more that trend has been happening in, last year, the year before, not 10 years ago, all right? So there you go. That is again, NVIDIA, Netflix, Lam Research, Adobe, Intuit. Again, all part of Tom's Option Tools software. Again, it's www.tomsoptiontools.com if you're interested. But I'm going to tell you this. Those of you that are part of, where do I start? The microcurrency trader. Those of you that are a part of Money Calendar. Those of you that are part of any of our research services and our lifetime subscribers, we're kicking in as part of that lifetime subscriber a year of our tools. All right, that's part of the service that we're offering to our lifetime subscribers, and it also includes this little thing right here. How about this trading app that I look at every single day? Let me bring up the home slice there. That trading app right there, as you can see, we've got all kinds of very, very cool scan tools right here in part of Tom's Option Tools. These are also available to those of you that are part of our lifetime services, okay? How cool is that? All right, so let's kind of continue, because what I really want to do is I want to focus on some education for the remainder of our time together today. I want to focus on, getting in and looking at these flying 5. And I want to show you how to place these orders, because we're going to do 10 trades today, all right? 10, all right? Two hands, 5 fingers a hand. 10 trades we're going to do. Now, I'm going to tell you right now, the first 5, not going to be cheap, okay? Not going to be cheap at all. The second 5 that we're going to do are going to be much cheaper. We'll talk about the difference between the two. I want to get into that with everybody right now. So let's move over and let's talk about the flying 5. I'm going to recap part 1, and then I want to get into with you part 2 today. We'll get into part 3 tomorrow, okay? This is so important that I line this up and set it up with you, okay? That's why we got that airplane, all right, there on the screen, the flying 5. We're flying, all right? It's you need to understand, again, the strategy, and more importantly, the different option alternatives that we can do to simulate this particular thing as best we can, okay? So, here we go. Let's take a look at first, what is the strategy? Well, once again, the flying 5 is a strategy that starts out with the dogs of the Dow. Any of you who looked at the dogs of the Dow, you know that we take out of the Dow 30. There are 30 stocks in the Dow 30, right? That's not a pop quiz to see if you're awake. The 30 stocks we're looking at the top 10 by dividend yield. Okay, so there's a couple different ways to do it. And what we do is we look at those top 10. From those top 10, you take the 5 that are cheapest. That makes up the flying 5. We basically buy those at the beginning of the year, and then you hold them throughout the year, and you rinse and repeat the strategy every single year. So at the 1st of January, or the first trading day of January of each year, you basically look at those 10 Dow stocks, which ones are the cheapest. Sometimes you're going to get a repeat from last year, and it's going to kind of bubble over, and you're just going to say, all right, I'm going to hang on to this for another year. But a lot of times you're going to see changes in those stocks. 2021, this was the dogs of the Dow for 2021. You had Chevron, IBM, Dow, Walgreens, Verizon, 3M, Cisco, Merck, Amgen, and Coca-Cola. Now, of those, what we looked at was where were they at the end of 2020? And you see a lot of these stocks in here. I can tell you right now, when I look at these, Walgreens was a flying 5. All right. Cisco was a flying 5. Let's see what else we had on here. Looks like Dow Chemical was a flying 5, and Coca-Cola, and maybe Verizon. So you can see that there are a few flying 5s from last year that spilled over and became flying 5s again this year. The dogs of the Dow for this year include Dow, Verizon, IBM, Chevron, Walgreens, Merck, 3M, Amgen, Coca-Cola, and Intel to round out those 10. See them there? What I do is I look at what's called dividend yield forward. So we have a forward look at what expectations are of these dividends, okay, based on what they've paid in the past. And if they also have some sort of a constant small increase, that's added into the forward look. So we do that, and what we've learned is that if you take a look, Dow Chemical is the one that has the highest dividend yield right now, sitting at around 4.94%. This is as of the end of 2021, coming into this year. Verizon had the second highest dividend yield. So in order to capture the dividend yield, what do you got to do? What do you have to do? You have to own the stock. Now, we can own the stock and be option traders at the same time with a covered call. And a covered call allows us to still capture the majority, if not all, of the dividend yields. Okay. Down at the bottom, look at Intel. Intel rounded out the bottom 10 of the dogs of Dow, and it had a 2.7% dividend yield, even though Intel is a tech stock. It's a chip stock. Now, what we do is we take the 5 of these that are the cheapest in stock price as of the end of 2021, and they are Dow Chemical, Verizon Communications, Walgreens, Coca-Cola, and Intel. So what is the strategy? Number one, simply buy the stock. And what the folks that follow this, dog traders and flying 5 traders, will take a pot of money. All right, they'll set aside a certain amount of money that they say, I'm putting this towards the dogs of the Dow. And they'll go in and they'll buy equal dollar amounts of each stock. Now, the interesting thing, because when I was doing this and setting this up over the weekend, because that's what I do, we rang in New Year. What else happened? We went in and had our New Year celebration. We had the weekend off. Sunday, I'm looking at this stuff. Okay, I'm looking at this stuff on Sunday. And, of course, I'm trying to kick the family out who came in late because, again, I had COVID. You guys all know that, right? I had COVID. I caught COVID around the middle of the month. All right, really started catching it toward the end of the month. My wife got COVID, obviously. How's she not going to get COVID? Okay, we decided if one of us is getting COVID, we're both getting COVID. So anyway, I got it first and she got it. She had the worst. My worst COVID was, I want to say, the week coming into Christmas. Hers was Christmas Day. And anyway, so long story short, we started seeing the family here this weekend. They're all they're. I mean, I've got my brother-in-law just lives a couple miles from me, and so everybody was camped out at his house. Well, they all started coming over when they found out. Oh, you know what? You're not spreading this anymore. Your wife's not spreading this anymore. So it's been like Cheers at our house. It's been a revolving door. Ryan, I got you for a few minutes here. I forgot to even say good morning to you.
Hey, how's it going?
Good. Did you get rid of your family yet?
Man, the in-laws and everything.
Yeah.
Man, I got rid of them as quick as I could. Love them. I love them to death. Love them.
Families are like boats. Here in Florida,
Yep.
when the best 2 days of your boat is the day you buy it and the day you sell it. And I think in-laws are the same way. The day you see them and the day you see them leaving. And
Yeah.
but I mean, the one thing I'll mention real quick as we move into this piece here is, man, I the stories that I heard with TSA. My nephew tells stories that, I mean, I am literally in stitches listening to him. He said, we're going down the pathway to TSA. Now, in Newark Airport, which is where they were coming in from, coming from New York, they flew through Newark into Sarasota. So they're in the TSA line. He goes, the TSA lines are all glass and they're like hallways. And he said, it's like they're trying to trap the COVID in with everybody. The Omicron is getting trapped in there and kind of moving around. He goes, we're going so slow. I've got a cat. And he says, I've got a cat, and this cat's not a friendly cat. It's like, had to take it out of the cat carrier. Meanwhile, my niece has 2 babies. One is about 1.5 years. The other one's about 5 months old. I mean, she had them really close together. They're crying. She's got one. Her husband's got the other one. Nephew's got the cats. He goes, we're walking down. He goes, I pulled the cat out. I'm holding the cat like this. He said, the cat lets out this big meow. The kids all of a sudden are startled by it. So they're silent and they're listening to this cat. Rah! And then they start screaming. And it's just constant meow, scream, meow, scream, meow. It's like they're communicating with each other. He said, finally, this guy behind him goes crazy and says, this is dangerous.
Oh my God.
Got like Jerry Seinfeld. This is dangerous. Yeah. We're trapped in this COVID container. Help us. I mean, they finally get through. I think they detained that guy because he was going nuts.
Yeah.
Anyway, this is the stories I heard. But we're glad to see them going on. It was great having them over. It was also great seeing the dogs of the Dow last year as they performed. The Flying Five had about a 14.5% return. Nothing near the S&P, but typically this particular group of stocks outperforms the Dow, outperforms the S&P by about 20% a year. And I'm talking about going back over 22 years, going back to 2000. So anyway, that's my story about the family. Great seeing them. So we'll see you again soon. And now it was great seeing the Flying Five for 2021. Now I want to see the Flying Five for 2022. Now, there are a couple ways we can trade this, guys. Like I said, we could buy the stocks. How about adding options to this? Well, we could look at covered calls. Covered calls are a way of bringing premium in. And yesterday I talked about bringing premium in to the range of about 10% of the stock price. So if I'm going to get an average of about 4% dividend yields, if we look at Dow Chemical, I'm going to get a 5% yield on Dow. If I can bring in about 10% on the option premiums, so that's 10 plus 5 is 15%. Even if the stock goes nowhere, I have a 15% return. I got 15% cushion in case it pulls back. And of course it goes higher, then I'm definitely going to get the 15%. And I might even get some of that sooner. All right, so that's covered calls. Now, how do you place those trades? Well, a covered call trade is very easy to place. How many of you here, whether you're with me on Monday Morning Live or whether you're with me on YouTube, how many of you here in the room have never done a covered call before? All right. And I asked that question because that's one of the first option strategies that not only people learn, but it's one of the first option strategies that your broker will allow you to do because it has such low risk to them. It's actually lower risk than buying a stock because you've got some hedge there. So I want to show you how this sets up. Let's come over here. Let me jump over to, I've got Dow Chemical up on the screen right now. Look over what I have over here. I have these all set up to trade. So I've got Dow Chemical. I can see this is going to cost me about $51, and I'm going to set this up as 51.80. I think that's where I had it yesterday. Let's preview that order. All right. And then you can see here, what's going to cost me to buy 1,000 shares of Dow and sell 10 of those calls. Let's place that order. All right. That order is now in the hopper, placed and ready to go. Let me go back to my saved orders once again. All right. Here's my saved orders. Now I got the Dow order in. Let's look at the Intel. And these are, wait a second. I got 2 Dow orders on here. What's that all about? Let's see. So this one, of course, it sets itself up when I'm ready to go live. I got a Dow order, and I know that. Let's look at the Intel trade. So Intel looks like now to do this correctly, I'm going to need to buy the. I have it as 1,100 shares, but the stock was trading at a much lower price than a couple days ago than it is now. So I'm going to need to reset this, because if I want to spend like 50 grand on each of these trades, what's this going to cost me? Actually, it's still going to cost me about 40. It says 46.66. So let's make that. I had it at 45.80. Notice it's going to cost me about 46.80 now. I'm going to put this in at $46.75 as a limit order. Let's preview that order. That's going to be about 51. Yeah, I'm going to give or take a little bit. There we go. All right. Filled on Dow, filled on Intel. Back to my saved trades. Here we go. Saved. There we go. Dow, Intel. How about Coca-Cola? Let's look at it. Now, Coca-Cola is a $60 stock. So I only need 900 shares of that to get to that rough point. So if it's $60, I'm going to sell the 60 calls. Now, notice what I'm doing, guys. All right. I'm coming in here, and let me blow this up for you. So I'm buying stock, and for every 100 shares of stock, I'm going to sell 1 call. And I'm selling those January 20th, 2023s. I don't have to deal with this anymore. This is not one. This is a fire and forget. I'm throwing this in the hopper, and I'm going to look at it later on in the year. I mean, I'll look at it every day I open this account, but I'm not going to need to deal with this too much. 55.50 was yesterday's mid price. 55.85 is today's mid price. Let's bump that up. Let's see what that's going to end up costing me. It's going to cost me about $50,000. I'm going to place that order. I'm buying those covered calls. Let's go ahead and put that in there. And looks like it's still open. That didn't fill right away. Not a big deal. Back to save trades once again. Let's go to WBA. That's Walgreens. All right, put that in. Do you see what I did, guys? I have this all set up. I have this all set up ahead of time, so that if you do this, I set my orders up. A lot of times I'll set orders up at night or early in the morning before the market opens, because when the market's open, I don't want to mess around, and I want to have this all ready to go. That way I don't screw anything up. WBA, $53.28. So that's gone up a little bit. So I'm looking at the 52.5 calls. Those are slightly in the money. All right. Now, if I change that, if I decide I'm going to go with the 55 call, now that's going to come in, and I'm going to be able to buy the stock for around 53.32, whatever. I'm going to be able to sell this call option for somewhere around, $4.90. So together, we're talking about maybe $48.45. So $48.45. Let's preview that order. Let's get that in. Yeah, 48,000. Okay, you know what? Let's cancel that for a moment, because you know what? Maybe I can add another 100 shares and do 11. See what I'm doing? I'm trying to get myself around $50,000. All right, or whatever it is that you're looking at. Okay, that's 53. That's a little bit too high. So I'm going to go back to 1,100 or 1,000. Excuse me. We'll go back to 1,000, and then that's immediately going to set that back to 10. Again, 48.45. Let's preview. Let's place that order. Let's get that in the hopper. All right, 4 down, 1 to go, and I've got filled on 2. Still open on these 2. So what's left over? Dow, Intel, Coke, Walgreens. What's left over? Verizon. All right, let's look at trading Verizon. So Verizon looks like this. I'm looking at, again, buying 1,000. Isn't it interesting? I've never had this happen where they're all trading around $50. So this is actually quite easy for me. 49.86 is the mid price on this. And so I had it yesterday at 49.25. See how much I lost by waiting a day? And so let's look at 49. Let's look at 49.90 on this. So buying 1,000 shares, selling 10 covered calls. Doesn't matter if that's 101 or 505. I'm still doing it for the same debit. And so I'm going to do this, look to try to do this for that debit price and place the order. It's going to cost me 49. So, I'm trying to get these all in the 50. All right, so here we go. So I've got 3 of these 5 done. Now, let's go back and let's talk about modifying for a moment. So, I really would like to get these 2 done because, again, I'm not really talking about nickels and dimes here because we're looking at going forward and making dollars. All right, this isn't a short-term trade. So I'm going to go in and modify. I want to take a look at that WBA trade. It's an open trade to modify that and to change it a little bit. Notice it's gone to 48.48. So I'm going to make this 48.50. All right, 48.50. Going to try to get just above that mid price a little bit. Let's preview that trade. 48, there we go. Place that order. And let's see what's going on there. Okay, so the order was canceled to 48.45, and now the buy right is 48.50. It's still sitting as an open order. Wow, that's cooking. Let's go over to Coke and let's see what we're doing with Coke. So Coca-Cola is now 56.04. I was trying to get this for 55.85. Look what's going on with Coke. It's fizzing up a bit. Let's go ahead and move that order up to 56, and then I'm going to let that sit. All right, so Coke is going in. The 55.85 is canceled. The new one is 56. These 2 are still open. I'm going to sit on those, and let's just see where they go. But there you go, guys. So what I have done is I have put 5 covered call positions on. Okay, now, before I move into part 2, let's go over and let's see what's going on in the chat, and let's see if there are any questions that people have. All right, Street Smart Central is correct. That's what I am using, but you could do a covered call in practically anything, okay? You do not need Street Smart Central only. In fact, I don't recommend brokerage services, okay? I recommend whiskey, all right? This is a nice tomstradingroom.com whiskey that we had, a entire barrel we got. I recommend having a taste of that. That's good. But I don't recommend brokers. What I find is that you're never going to hear me say, oh, go with Robinhood and you and I can get a free stock. Oh, go with Webull and you and I can get a free stock. I would rather you pick a broker based on its merits and how comfortable you feel with them, not because you're going to get a free stock to get roped into a broker that you might not like. Okay. Poor man's cover call. We're going to get into that, Paul. In fact, that's going to be, I want to move up to that. Okay. But we will be covering poor man's cover call by tomorrow. All right. Do we put stop losses on cover calls? On this particular strategy that I see here? No, I don't do that. And the reason why is because if you go back and you look over time at run-ups and drawdowns on the dogs of the Dow, you'll find that the drawdowns on these, the worst drawdowns I have seen. Now, one of the worst ones I believe was after 9/11. We saw some drawdown on dogs of the Dow. Actually, it was 2001. Big drawdowns on that. All right. Why buy Coke at its high? Because I don't know where it's going after this, Florida Steve. It might go higher. Okay. Again, this is an investment strategy. We're not picking things here. We're not picking it down to the exact day, to the exact minute. This is a strategy. If you go back and you look at it, okay, it is averaged better than 20% better than buying and holding SPY, buying and holding the Dow. All right. It's an investment strategy. This is not a trading strategy. This is options investment or stock and options investment. So that's what we're looking at. Let's see what else we have on here. The platform is Street Smart Edge that I use. It's one of several brokers that I have for any of you that I'm looking at. So again, and the other thing I want to mention too is this is risky. You know what's risky? Let me tell you what I think is risky. GameStop, that's risky. All right. Buying AMC at the height of the Spider-Man movie, which I haven't gone to see yet. All right. No Way Home. How about, they need a movie called Spider-Man 5, No Way of I'm Getting Out of the Home. The COVID, the COVID version, No Way Out. So that's risky to me. Buying a stock, throwing all your money into to the moon, that is risky, because what you don't know. The biggest problem with the folks that, and God bless them, they're trying to get into the market, they're trying to make money. I get it, but a lot of what folks are doing are going out there and throwing a lot of money at one stock, or a lot of money at one call option, or, and yes, we see every once in a while someone makes a fortune doing this. But how many of the other folks that follow the to the moon crowd, the apes, how many of them are washed out? How many of them got taken out of the market very quickly because they got so overhyped into a trade, all right, that they've got so emotionally invested in an option that they threw caution to the wind and were out. I mean, you're going to find many more folks on that. Okay? So that's what I think is risky. We are able to plot an actual amount of risk based on history. Now, history is not a guarantee. History is a pattern. I'm a pattern trader. I trade on patterns, right? And I also trade on consistency, and I trade on a lot of diversity, which means I look at money calendar patterns. I look at technical patterns. I look at patterns in fundamental data. And what I find is the more that I do, the more likely I am going to replicate my past success. Even though I've said it before, no guarantees. All right, so let's talk about version number 2 right now, because a lot of you are saying, maybe not so much it's risky, but how about something that's less expensive? How about something that has an absolute fixed amount of risk on it? We all know stocks have a fixed amount of risk, right? When you buy a stock and you sell a covered call, you know what your risk is. That's if the stock goes to zero, okay? So that's a fixed amount of risk too. If you're selling naked puts and you're overextending yourself, that can be very risky. In fact, when we talk about put options, and I'll talk a little bit about put options tomorrow, selling puts, all right? We have a service called Rocket Wealth. I'll cover it tomorrow. I do something called cash secured put selling. I'll explain what that is and how that, what the risks are between that and non-cash secured put selling. We'll do that tomorrow. But today, let's take this a step further, and let's take the costs down 90, 95%. How do we do that? We do that by analyzing the stocks once again. And this time what we're going to do is we're going to look at the options themselves, okay? What do I have on the screen right here that you can see? Someone please tell me. What do you see on the screen right now? I'm talking to you, YouTube, as well. What do you see on my screen? You see a chart. You see a chart of Dow Chemical. Yes. You see candlesticks. Yes. But Tony, and Crypto Curious, and Robert. Well, Robert's got a good one there too. But you know what I see? I see low implied volatility. And yeah, this is only a 30-day chart. But what I've got on here is I have the options that are greater than 90 days. You don't see me show this that often. Usually this line's a red line. All right. I brought the black line up today because that shows the long-term options. So long-term options, take a look at this. Let's bring up the 200-day chart, right? Going to get a little bit, going to squeeze it in a bit, but you can see here, look what happened. Here's your volatility dropping down here near low. Then it spiked up. That was a pretty high spike for Dow Chemical. when we dropped in price. But then we got a double bottom here. We started moving higher, and notice what happened. The options, which were trading at the 38% level, dropped all the way down to the 29% level before popping up a little bit. We're back down to the low side of volatility. Okay, take a look at Verizon. Verizon's volatility is a little bit higher, but it's not as high as where it used to be. It's come back down to average. Take a look at Walgreens. Has been higher, has been lower, dropped down to average. Take a look at Coca-Cola. This is the high side, 22. This is the low side down here, 15. Here's where we are right now, 17s, in the 17s. Take a look at Intel. All right, high was at 35.5. Low was down here at 24. Right now trading below 30. So it's trading around average. We want to see these at least average or lower if we want to be option buyers. Now, if you go out and you take a look at the leap options, and what is a leap option? A leap option is an option that basically has a long-term option that has 9 months or greater to expiration. Do the January 2023 options have greater than 9 months to expiration? Yes or no? Because that's yes or no would qualify whether they're not a leap. And number two, leap options, although they're going to be a little more expensive in price, are going to be a lot less expensive in terms of their implied volatility. Now, let's take a look at each of these. And what I want to do is I'm going to set up 5 different screens, and we're going to look at how much these options are going to cost us. And we'll talk about how to implement this strategy as a flying 5 with call options. So flying 5 with call options is we would look at buying the leap calls, okay? At the money, out of the money, or in the money. Well, the near money options are going to be your best setup because they're going to have the least amount of slippage between the bid and the offer. Let's take a look and see what we're talking about. So if we go and we look at, for instance, let's start with Dow Chemical. So here's Dow Chemical. Now, when I have Dow Chemical, I see all of these potential options I can trade. The Jan 7s expire in less than 4 days, 3 days now. But we want to look at the January 2023. Look at this. They have January 2024 options as well. See that? But I want the Jan 2023s. So I'm going to set this up. Let's pop on over. There's that dividend yield. All right. You're not going to get the dividend when you buy the call options. What are you getting instead of the dividend if you're going to come out here and look at, for instance, the 55 calls? So if I buy the 55 calls, that's just slightly in the money. I'm going to pay $6.80. All right. What am I not paying? Well, I'm not paying $56 for the stock. All right. I am buying the option. And I'm going to pay $680 for the option. We're not now in the thousands of dollars. We're in the hundreds of dollars. So let's take a look at this for a moment. And let's create a trade. And I'm going to go ahead and risk graph this out. Now, the risk graph just basically tells me that this is going to cost me $680 for one call. Okay. I have unlimited profit potential because, again, call options, you have no limitation to the upside. You have downside risk. Maximum risk is what you pay for the call option, $680. Take a look at this number right here, 382. That's the number of days to expiration. So this is a long-term option, a leap option. This is what your risk graph looks like. Now, again, take a look here. Now, back in August, Dow Chemical was trading at around 60, I want to say about 66. So if we move up to 66 tomorrow, that's going to put us at about a $577 profit on these calls. Okay. And then, so that's a kind of an interesting outlook right there. Okay. We got this really nice move to the upside. We get up to 66. I mean, today, 577. What about when all the time value comes out? If this thing's still trading at 66, am I making any money? The answer is yes, you are, because it's showing a $410 profit. So you've got a potential to make almost a double. I mean, we get to $67. We're in double territory here in the next week or the next month if we get a pop in Dow Chemical. But if it takes a year for that to happen, you still have a $530 return on a $680 risk, right? These are all theoreticals. This is what this shows me. Okay, see that there? All right, this red line represents today. The blue line represents 255 days to expiration. The green line would represent 128 days to expiration. And the black line is at expiration January 23rd, 2023. So that's what we're looking at here, guys. Let's set up the rest of these trades. So that's going to cost me $680 for one call. All right, let's take a look at the next one. So the next one we're going to look at would be, let's move over to Verizon. So here's Verizon Communications, VZ. I'm going to change my stock and option tables, and I'm going to put VZ in the screen. I'm going to update VZ. Again, I got my strike prices here, and I don't want January 7th today. I want January 20th of 2023. Then I'm going to come over, and I'm going to go ahead and update this real quick. And I see that the January 52.5 calls with a price of $2.91. All right, that is what we see in terms of how much you're going to pay for this at the money, very near money option. Now, did you just see something? Dow Chemical is going to cost me $680. So if I wanted to keep this all kind of in the same cost, dollar cost average, then I would need to buy 2 of these 52 half calls. Let's put the risk graph up on the screen. If I bought 2 of these, now we're talking about $291 each, but 2 together would cost me $582. Pretty close. Okay, it's not going to be exact, but pretty close to what it would cost for one of the prior options. So here you go. Once again, this is near money, unlimited profit potential, maximum risk. It would be what you put into the trade, and then of course here's our trade. Now Verizon's going to have to get up there and double our money. Verizon's going to have to get from 52.5 wherever it is right now. Going to have to get up into, I want to say, the $59 area. You know, maybe a little bit less if we're going to expect to see a double on this trade. Okay, $58. We're going to need to see this thing climb. So maybe when this 5G delay gets rolled out, then maybe it'll start picking up some steam. We'll see. All right. I took my covered calls near the money. That's the best answer I can give you. So there's number 2. Let's look at number 3. Number 3 would be, what's the number 3 stock chart we're looking at? Walgreens Boots Alliance, Walgreens. And now Walgreens is going to be a little bit more expensive, I believe, just by looking at this graph here. Let's go ahead and take a look at that stock option table for Walgreens. We're going to need to come up. There we go, WBA. All right, not the WNBA, the WBA. And then I'm not looking at January 7th today. I'm looking at January 20th of next year. And then here we go and take a look at this. So the stock's trading at 53.06. We're closer to 52.50. So guess what? The 52.50s are what's going to be $5.93. So I'm really looking at maybe 1 to try to keep it real, keep it in the same wheelhouse as the other 2. So if I bought, for instance, the 52 half call, it's going to cost me a little less than $600. There you go. $593 risk, unlimited profit potential. Again, what's that risk graph look like? Well, here's what the risk graph looks like. What are we going to need for a double on this trade? We're going to need this thing to get up to around about the $64 level by next year, by January of next year. And that would get our double. We're not getting, now again, we're not getting any, what? We're not getting any dividends. Okay. TS says there's always a discussion about theta for options. How does the effect on theta, how is the effect on a long-term option? Very, very little in the first 6 months of the year, TS. But what I want you to do is I want you to, for those of you that that are in our that are in some of our membership rooms, those are the 1 p.m. rooms. At 1 p.m. on Thursday and Friday, my coach, my partner, Joe Contes, is going to be here. And Joe is Mr. Option Greeks. And Joe will go through the effects of delta, the effects of gamma, the effects of theta, the effects of vega on long-term options this week. Okay? So, can you make dividends off options? No, you cannot. A dividend is paid to a shareholder. An option trader is not a shareholder. They have the right to buy the stock. But until they exercise that right, they have no rights as a shareholder. Okay? And Joe is Mr. Greek. He really is Mr. Greek. Sure, I'll pass that message along to him. So there you go. That's number 3. Let's get into number 4. So back to the stock charts once again. Number 4 is Coca-Cola. Coca-Cola has broken out to new highs. All of a sudden, Fizzy Bubbly is becoming very popular here. So let's take a look at Fizzy Bubbly as far as stock options. Come on over. I'm going to change this to KO, the symbol for Coke. We're going to update. I'm going to just go very, very quickly. Try that again. KO, update. And then I'm going to come over and I'm going to change us over to January 20th, 2023. Let's take a look at what we've got for Coca-Cola options. There it is, $59.30. Looks like the 60 call. No, I don't want the options in a row. No, guys, the leap options are not trading for a dime. If there were, I'd buy them all day long. No, I've got the wrong one. I didn't update correctly. Oh, yeah, I did. I just didn't turn off the January 7th options. Let me turn those off and update this one more time. There you go. There's those 60 calls for $3.88. Yeah, you might consider buying 2 of those. All right. And it's going to end up costing you about 600 and what, 660. Let's go take a look and see. Let's see how my math is as far as a Tuesday morning. Oh, well, that's for 1 to buy 2. Excuse me. Let's set this up and if we bought 2, what was it going to cost us? No, 776. So you know what I would do in this case? I would ixnay that and I'd go back to the option tables again and say, well, you know what? Maybe if I want to kind of keep everything the same, maybe I go buy this in the money Coke. All right. The new Coke. There's the new Coke trade, $513. All right. That's going to keep us underneath that, around that $600 or under $600 mark. And now we've got a trade that's an in the money trade. Going to cost us $513 right there in the middle. This is what your risk graph is going to look like. Where's the double? Where's the theoretical double on Coke? Well, we're going to need to see Coca-Cola. Again, here's my $500 potential loss. Here's my $500 profit if it doubles in value. I'm just going to run the arrow up and I'm going to say, wow, today it needs to get to around $66.80. But by the end of the year, if we just get up to $67.80, we've got a potential double on this KO trade. Once again, this is the January 20th, 2023, 57.5 calls. All right. And number 5, stay alive for the flying 5. Going back to our stock charts once again, let's take a look at Intel, INTC. This is a fan favorite. All right. I've sold puts on Intel to try to acquire Intel over the pretty much the last quarter of this year. I have not been successful at getting Intel stock. The only thing I've been successful at is bringing premium in. But now, as you all know, I bought Intel stock. And as you all know, I also sold cover calls. So I'm going to have the ability to take that dividend in throughout the year, regardless of what the stock does. But here's the call options. Let's take a look at this area here. And guys, by the way, and Bridge, you're correct. I'm looking at prices that are set up as of yesterday's close. So these are going to be a little bit different, okay? Again, whether it's a little bit higher or not, this is not a day trade. I'm not as concerned with saving a nickel or dime as I would if this were a trade that were happening at the end of the day or the end of the week or maybe even the end of the month. This is a 12-month trading strategy. All right. We're looking at dollars. We're not looking at pennies here. I don't want to trip over dollars to pick up pennies in this particular strategy. Let's go take a look at the options on Intel. Options on Intel. Great comments and questions, by the way, guys. Keep it up, please. So going to Intel, INTC. Let's go ahead and hit the update here real quick. January 7th? No. I want the January. Look at all these options on Intel. That's because they got a lot of weeklies in here too. There's the Jan 20s. Let's hit the update button. Let's come on down. Stocks at closed at $53.21 yesterday. Looking at, is it going to be closer to this side or this side? I mean, really it's closer to the 52 halves. So if I bought one of the 52 halves, that's going to be $6.75. I actually like that better than the $5.75. Look at that. You get it for an extra $1, you get an extra 2.5 points in the money. Okay. You're 2.5 points lower. So to me, that's a value. All right. Let's risk graph that and you'll see what that's going to be. $500 or $675 trade. And then of course, where's the double? That's what we're looking for. Where is the double on this trade? Well, if it's going to be $675 cost, I'm looking somewhere for a $675 return. And it looks like somewhere in this area right here. There it is, $66. That's by the this time next year. Next month, we only need to be at around $63. If Intel pops to $63, this call option trade could double in value. That's because, again, we're going into money and the volatility might kick up if we hit new highs. If we break out of that $56 move that happened back on the last earnings report. So once again, what I've covered with you here today is we've talked about the flying five. We talked about, and I reiterated those covered calls. Okay. I showed you how those orders are placed. The same thing with, if I were to go in and create a trade, whether it's on INTC or whether it's on any of these, I would go in, I'd pull that call option up. All right, just think of this times 5, the other 4, this stock and the other 4. I would be buying to open, insert quantity here. That's you. All right, the expiration you're looking for, again, is on those leap options as January 20th, 2023. Now, Intel's not trading at 22.5. We know where Intel's trading at. I believe that 52.5 strike was what we were looking at. Right now, they're 680 by 7. So, if I'm looking at that, I might say, all right, well, what about the 55s? They're 570 by 590. Maybe that makes sense to get a 580 if you think that fits in your wheelhouse of cost and risk. Okay, so there you go. And that is, how we place that. Now, I like limit orders. I'm a fan of limit orders, but if I want to get filled on this today, I'm going to have to constantly go back and look and see what's going on when it comes to this type of trade and any trades. As you saw earlier, if you were joining me earlier today, you saw me get filled on 3 of those 5 trades that I put on. All right. Looks like Coca-Cola got filled, so let's call it 4 of 5 trades. And so, again, that's the part where, I spot the opportunity. The opportunity of this week is the flying 5. Creating alternative risk trades. So instead of buying the stock, I bought the stock, but I sold call premium that brought in about a 10% return for the year. And I get to capture the dividends. We also talked about buying calls, but now buying calls, we're not looking for dividends. We're looking for returns. What is your return? Hey, if you can get 50% return on any leap call option, to me, I like to take half of that off the table right away. And then I'm holding the other half for that 100%. Okay, so that's what I look at when it becomes to when it comes to that particular type of trade strategy. Once again, guys, what we looked at was we were looking at the graph on Intel, and we're basically all the way around we're buying those near money call options. For Intel, it was the January 20th 52.5 calls. For Coca-Cola, we were looking at the January 23 57.5 calls. For Walgreens, we're looking at the January 20th, 52.5 calls. For Verizon, we're looking at the January 20th. These are all 2023 options, by the way. 52.5 calls. And for Dow Chemical, we were looking at the January 23rd, 55 calls. All right. We will do a complete review of this again tomorrow. All right. And, buying to open is opening the trade. Selling to close is closing the trade. It's opening, you're closing. I'll get through, talk about that. We'll do a review of covered calls. We'll do a review of call options tomorrow. And then I will get into the poor man's covered call and how to really bring the costs down on this particular trading strategy. You asked me to show me the money. See that above my head right there? Show me the money. I'm showing you the money, guys. I'm showing you the money on the investment side. There you go. All right. We'll also do a quick little review tomorrow on stocks, and I want to talk a little bit about, again, how we'll maybe even throw some selling put stuff in there. We'll talk about put selling. You guys have saw what we're doing with microcurrency. Biggest moves of the year in the asset classes has been in the microcurrency area. If you're interested in following me here for 2022, right up there, there's a link you can subscribe to. All right, guys. Hey, thanks for joining me. We'll see you same time, same channel tomorrow. Bye, everyone.